but let's now talk about our own markets and how trade could really pan out today. We have our research team here to bring you the trade setup. Ekta, Mangalam and Surbhi are all going to help us out with that. Guys, a very good morning to you and happy Dhanteras to everyone as well. Ekta, let me come to you first. The way the global cues are right now, Asia is sharply lower as well. Definitely looks like the start will be lower for our own markets.
Well, thanks for that. And yes, hopefully that festive cheer will probably overpower any kind of negative global cues. But nonetheless, yes, as of now, it indicates that maybe it could be a lower start for us. But yesterday, just to recap, the markets remained in a range and they closed with minor cuts. We had the Nifty Bank, which gained around 25 odd points. But overall, what we have seen is that the Nifty has been unable to cross that 19,450, 19,500 levels on a decisive basis in the past 4 to 5 trading sessions. FIIs continue to be net sellers, so they net sold around 1,700 odd crores. DIIs net bought around 1,500 odd crores. So net institutions were sellers in yesterday's trading session. Hawkish comments from Powell are going to weigh on our markets as well. So oil prices, which could probably cushion any kind of fall, are around $79 to $80 per barrel. The US markets, they did correct after S&P broke what was its longest winning streak since 2021. Asia lower after Powell's comments, and the Gift Nifty indicating a bit of a weakish start as well. A lot of results: Biocon, Coal India, ONGC, Eicher Motors, Glenmark, SAIL, just to name a few. There are a lot of numbers from the broader markets to watch out for as well. And in terms of Nifty levels, we've been tracking it in the past couple of days, the 20-day moving average, the 100 DMA as well as the 50 DMA. So these would be important points to track. But nonetheless, yes, global cues could weigh. Let's see whether we manage to shrug it off with some festive cheer.
All right, let's hope that happens. Ekta, thanks a lot for that. Let's also bring Surbhi in now, who's looking at all of the stocks that we should watch for in today's session. Surbhi, like Ekta was pointing out, there are a lot of big earnings which are expected today, but a lot of important ones which came through yesterday as well, post-market close.
That's right, fag end of the earnings season and a lot of numbers that we'll be reacting to. The first one will be Zee Entertainment. The numbers are better than expectations. Revenues are up 20% on a year-on-year basis. EBITDA is up 6%. Margins have come in at nearly 13.6% versus our poll of 11%. Muthoot Finance, the numbers are below our poll, and the net interest margin, it has a 5-quarter low. The net interest income is at 1858 crores and PAT is at 991 crores versus a poll of 1043 crores. Aurobindo Pharma, the numbers are better than the poll. Revenue at 7,220 odd crores, EBITDA at 1,374 crores, and margins at 19% versus a poll of 17.4%. Torrent Power, it was a steady set of numbers. Revenue up 4%, EBITDA up 5%, and margins up 20 basis points. RVNL, the revenues were flat on a year-on-year basis. The EBITDA was down nearly 6% and margins at 6.1% versus 6.4% same time last year. We'll also be reacting to numbers from Senco Gold, BEML, Piramal Enterprises and Aditya Birla Fashion, just to name a few.
Okay, thanks a lot, Surbhi. We're going to watch out for all of these stocks in today's trading session. Finally, it's over to Mangalam, who's looking at cues from the futures and options space. Mangalam, this is the last trading session this Samvat, other than the Mahura trading that we will get. What are the cues looking like today?
Well, the cues are looking not so good when it comes to global, but locally we've seen dips being bought. Yesterday was a very range session. In fact, the Nifty was ranged between the 100-day moving average and the 20-day moving average. As you can see from the highs and the lows of yesterday's trading session, sub 100-point range is what the Nifty had from the high and the low. It was also understandable given it was weekly options expiry, so a lot of straddle writers were hoping for this range trade itself. Now with the Gift Nifty suggesting a near 100-point downtick at the open, the question is whether we see a purchase from the lows and go back up to the 20-day moving average or not. The other thing that happened was yesterday the cash market selling by the FIs increased to around 1,700 crores as well, after a couple of days of that reducing to sub 500 odd crores itself. The FI long exposure still at 19%, 81% positions are on the short side. So any recovery would lead to these shorts covering their positions. But for options that expire next week, 19,500 call has seen a fair amount of writing. That also has the highest open interest. So that's one important mark to watch out for on the way up. 19,400 call writers as well. After yesterday's trade, got a little active for a premium of 125 odd rupees. And there has been some writing at the 19,400 put That makes the 19,350 to 19,325 mark extremely important in terms of a support. So what is it that the options are suggesting? Resistance upwards of 19,500 on the Nifty, though given the gift Nifty cut, it looks unlikely that we go all the way up to there. But lower levels, the market's likely to open in support zone. So the question is whether we see buying out there or not. For the Nifty Bank, the 20-day moving average is something that we conquered yesterday. On the way up, 50-day moving average is something that we'll be watching out for. And it's a stock-specific market, a lot of stocks in focus. MCX has entered F&O ban.
Okay, Mangalam, thanks a lot for laying out all of those cues for us. For now, it's a full 100-point cut that we're seeing on the gift Nifty. So let's see if we can really move past that and move up from that level during the course of the day as well. But with that, we're going to get into a short break. There's lots more news and updates coming up for you. We're also going to get you a word from some market veterans on how things could look in the coming year.